Buckle up, everybody. It's time for the market report. Here on the channel, we strive to cut through the fear, uncertainty, and doubt, the FUD, and get to what's really going on and what you should do about it. So let's jump into some stats. Now, when I last checked, mortgage rates were hovering around 7.4%, which is kind of creeped up recently as the Federal Reserve has kept further interest rate hikes on the table as they seek to tame inflation. So we don't know where interest rates are going. Again, we don't have a crystal ball on any of these things, but they have kind of crept up recently. Now, median home price in Clark County is at $550,000, and that is up about 4.5% year over year. But several months ago, the median home price was around $500,000, and if you would have bought then, you would have seen an increase in equity of about 10%. So just serves as an example of while a lot of people are hyper-focused on interest rates, they missed an opportunity to purchase and they missed out on that lower interest rate and that increase in equity. So again, it's better to look at the overall picture and have faith that over time the real estate market does well. Now, sales and listings have steadily been keeping kind of flat, but they're down year over year, and that reflects the people sitting on incredibly low interest rates who are just not interested in selling. Inventory remains low at about 1.9 months of inventory, so it would take about 2 months of all the inventory in Clark County to sell. And so what that means is the number of houses available for sale are very low. Time on market is at 28 days, and this has been falling the last couple of months. It was hovering around 40, which again means that homes are still being snapped up, even with the higher interest rates and with everything going on. There's still a lot of buyers looking for homes, and the demand is still there. So let's go take a look at the market from a seller's perspective, a buyer's perspective, and an investor's perspective. Now, if I'm a seller, I'm still feeling pretty good. I'm in the catbird seat because inventory is low, days on market is falling, medium sale price has been kind of on the rise. So I'm feeling pretty good. As long as my house is priced competitively, I'm feeling pretty good. There's a couple of things in the back of my mind that I'm gonna be maybe a little concerned about or just kind of monitoring. And one is just that as interest rates do creep higher, it is taking more people off the market in theory. So I want to be kind of cognizant of that fact. And that, now that we're at the end of August and it's kind of back to school, there might be some cyclical downturn in sales as people are kind of hunkering down. Kids are, like I said, going back to school. And, there's typically a slowdown around this time as the weather changes and stuff. But all in all, I'm still feeling really good about selling my house because there's a lot of motivated buyers out there and the market conditions are in my favor. Now, if I'm a buyer, I'm kicking myself a little bit because I bought into kind of the fear, uncertainty, and doubt, and I didn't purchase, 6 months ago when rates were lower and the median home price was lower. So I'm still kind of, I'm having a little regret about that, but they say the best time to buy was, 6 years ago, and the second best time to buy is now. Again, this is going to really come down to your personal situation and where you're at financially, because interest rates are something to obviously be monitoring, and they're an incredibly important factor. So, I'm still looking at properties, and I'm still looking at purchasing, because the thing about interest rates is when they are high, that does take a lot of people out of the running to buy. But if I'm still able to pull that off, I'm going to have less competition. And so while the market is still kind of hot and houses are being kind of snapped up, it isn't as competitive as it was, a couple of years ago. So you may be able to get a little bit more in the realm of concessions. There might just simply be less people competing on homes. So if you're still able to do it, it's always a good idea if it works for your situation. If I'm an investor, the cost of capital has been going up with the rate increases, but at the end of the day, it's all baked into the cake because real estate investing is really kind of a simple, is simple math at the end of the day. So those rate hikes are all going to be factored into offer prices I'm making on homes. Now, because a lot of people have equity, so much equity in their homes, they might not be willing to sell them at a discount to you as an investor because they can put them on the open market and see a possible better return. There's always going to be people that need cash quickly because of their unique circumstances, and so you're always going to be able to find those kind of properties if you look hard enough. But as I just mentioned, because of all that equity, they might be harder to find because people are just simply willing to sell them at market price. So I'm kind of monitoring, as an investor, I'm kind of monitoring where things are. I'm always keeping my eye out for potential deals that are going to come along, and I'm just factoring it all into that equation. So kind of steady as it goes, and we'll see where interest rates go, where home prices go, how the economy goes. There's a lot of things to kind of monitor like we all are doing. So hope you found this useful. If you did, please like and subscribe, tell a friend. It really helps the channel as I look to provide value. If you have any thoughts about what's going on in the market or you want to see something else on the channel, please hit me up in the comments below, and we'll see you next time on Discover Vancouver, Washington.